So Pfizer released the second quarter 2025 results, and I have to say I'm not impressed at all. I'm not bullish on the company. And my bear case, even though I'm not bearish in the near term, my bear case stands on two pillars. The first one is the patent cliff. As I'm about to show you in this video, there are quite a few drugs, you can see them there highlighted, that are going to lose the exclusivity next year. And the worst part is that those drugs actually account for most of the revenue in the three segments: primary care, specialty care, and oncology. Unfortunately, I don't see any drug in the pipeline that's being developed right now that has a potential to replace or to compensate for the revenue loss of these drugs. Why? First, let's have a look at how long it took for Eliquis to get where it is. It's almost 10 years. Just look at the revenue growth in this chart. It took it 10 years to be able to pull almost 2 billion in sales per quarter. So yeah, pharma, it's usually a slow in this regard. It's quite slow. So I just don't see anything to compensate for the revenue, man. I'm sorry. Call me crazy. The other pillar is the headwind that comes from the IRA Medicare Part D redesign, which has been already affecting some of the drugs that we will see in this video. So let's start with revenue. It came at 14.7 billion. That's 10% year over year. So it's an improvement, which is great, particularly when looking at this chart. So we can see that in the past year, this, by the way, represents the year-over-year change in revenue in each quarter. So here we have 10.3% in the second quarter of 2025, which, it's relatively fine. Certainly it's better than before the COVID, where, the company was struggling a lot to grow. So that was something positive. And of course, the revenue came in high due to the increase in Vyndaqel, in Comirnaty, Paxlovid, Padcev, Eliquis. I don't know how to pronounce them. Probably I pronounced them wrong. I'm not a pharma scientist, So to me, these are names. Anyways, what is the issue on this slide? Take a look at R&D expenses. Yeah, negative 9% year over year. That's not particularly exciting. Let me explain why. If you take a look here, this is the chart that shows R&D quarterly expense. This is the annual expense for the past 15 years. And you can see that since, naturally, 2021, these R&D investments have decreased significantly. Now, in my view, I think that's a huge mistake. And the only way for the company to compensate for that patent cliff that is going to happen next year is to research and to look for new drugs. That's how the company is going to survive. Otherwise, next year is going to come in, you're going to have these players that are going to lose the patent exclusivity, and then, of course, all this revenue, you can say goodbye to it, because then you're going to have the compounders that are going to make it 10x cheaper. And you know what happens. You already have probably some idea with GLP-1s. You already know the case with Novo Nordisk and Hims and Hers. So you know what happens when you have compounders. It's not good for the business. So that's one of the headwinds that I'm referring to. And the fact that, even when you look at the guidance for research and development was lowered from the previous value. I'm going to skip through some of the slides to show you that. You can see it here, the adjusted R&D expense. Previously, it was, the lower range, 10.7 billion. And now they decreased that to 10.4 billion. And the upper range was 11.7, and now it's 11.4. That's not what I want to see in a company that is about to lose the patent for their blockbuster drugs. I want to see R&D going up. I don't want to see cost cutting. I want the company to triple down in their research so they come up with drugs that hopefully can compensate for the patent loss. Now, coming back, what I have in this next slide is that upcoming LOE, this is the loss of exclusivity, yeah, it says that it's expected to be largely offset by strong revenue growth from recent launches and acquired products. Here is my skepticism. And I got to say that if you lose the top revenue, okay, again, these are, if you have a look there, look at Premvar 13, yeah? So that's the second in terms of revenue in the past quarter. So what you see here is the revenue that was generated in the second quarter of 2025. So Eliquis, 2 billion. Premvar, 1.4 billion. All these two, yeah, are going to lose the patent next year. Top two in the primary care segment. Then you have Ibrance and Sandy. These are the top two in oncology. Not particularly exciting. And of course, Ibrance is going to lose it in 2027. And then you have Vyndaqel, which is, anywhere. Here it says 2025, and then it goes to say 2028 pending PTE. So I wouldn't say that the patent cliff for Vyndaqel is going to end this year. I believe it's going to be 2028. But my point is that that is the top drug in specialty care. You see what I mean? So all the drugs that are contributing to the top line of each segment, yeah, the top two, the top one, are going to lose exclusivity. And that's not attractive for, from a top line perspective. So yeah, I don't think so that growing revenue at 15% year over year when you look at the first half of 2024 and 2025, I don't think so. I don't think that 15% is going to be enough to compensate for that. Moving on, dividends. So from a dividend perspective, yeah, the company looks really attractive. I give it to you. You can see here in these charts, this is the dividend yield, currently at 6.7%. And that's the dividend allocation. So this is the dividend per share, $1.7. Of course, this is the annual value. Yeah, the company looks nice on dividends, but you have to understand why the dividends are there in the first place. Usually, companies pay dividends to keep shareholders happy whilst they are going through some tough times. And the fact that the dividend per share is coming up, as well as the dividend yield going up, most likely because the share price goes down, is not actually a good sign for me because, again, I don't want dividends. I'm looking for growth stocks. And Pfizer, of course, it's not a growth stock when you look at the, overall annual revenue. I mean, if you go back here and you change the time frame to annual, how much are we talking about? Mid-single digits, last 12 months, we're talking about low double digit. It's not a growth stock, to be honest. So, yeah. What I want to say is that dividends, I don't think they're going to hold the share price. I think investors want to see more, particularly for a turnaround. So moving on, we have that reinvestment, the research and development, which again, it's got to be more. I want to see more R&D. And then it seems like they want to delever the balance sheet, which is something I don't understand. When you look at the current ratio, 1.2. So the company has the ratio of current assets to current liabilities is 1.2. So more assets than liabilities. Yeah, if you look at the net debt on that chart, I give it to you. It's a lot. It's 48.5 net debts, billion in net debts. So I agree. It's possibly a lot, but I don't see this being the priority. And again, it has to do with the patent cliff next year. So other topics include the cost optimization. So they have a manufacturing optimization program. They have a cost realignment program that overall the company is expecting 7.2 billion in net cost savings by the end of 2027. That's great. I love it. But do you know what's even better than saving money? Making money. And these optimizations are not making money, are saving money. So this is good for the bottom line, but I want to see the top line. I want to see an increase in revenue. And unfortunately, it's not going to help. Also, it doesn't help the fact that out of the 7.2 billion saved, only 500 million are going to go to R&D. So I don't know. I want to see more. I want to see something else. Anyways, looking at the guidance, for revenue, we have 72.5 billion. This is for the full year 2025. At the midpoint, this represents a decline of 1.7% year over year compared to 2024. That's quite bad, if you ask me. And again, we don't have patent cliffs this year. We're going to have them next year. So the fact that going into the patent cliff, revenue is already stagnating, it's not the best sign. Anyways, particularly because of this slide where they're saying that, yeah, we're going to be able to upcome the LOEs by largely offset, by strong revenue growth from the recent launches. I wonder how much do they plan to offset from these launches. Anyways, these are the products in the pipeline. And from what I'm seeing, the one that had the highest, by far the highest potential was danuglipron, which unfortunately was discontinued back in, I think it was May. I'm not sure if I have a press release. Unfortunately, the results didn't come in as expected. They didn't come in as expected. And yeah, it seems that the company is not going to go into oral GLPs, GLP-1s. And that's a problem because, as you probably know, right now, Novo Nordisk is kicking Eli Lilly's ass on the GLP-1 pill. And yeah, that's where the weight loss industry is currently going. And I had quite a few big hopes with danuglipron in Pfizer because I believed it was able to bring a new segment and improve the top line. But overall, that won't be the case. So when we look at the EPS, looking at that guidance, part of that EPS was actually diluted because of a transaction with 3S Bio. They had an agreement back in, I believe this was in May. In May this year. The idea was, to develop, manufacture, and commercialize a type of drug that it's used for, I think it's small cell lung cancer. And yeah, it seems that the company had plans to initiate the first phase 3 study in China in 2025. However, this is a deal that was diluting EPS. So yeah, it's another thing that really put me off. And, finally, when you look at the share price, the decline is significant from the highs in 2021. And I really don't see anything that's going to be able to turn around the sentiment at this stage. The patent cliff, you have headwinds from the IRA Part D. I really don't see anything. Maybe, and this is the risk in my bear case, is one of these drugs in the pipeline is going to change that outlook, particularly on the top line. But I just don't see any of these drugs having the potential to immediately compensate for 100% of the losses due to the next year patent cliff. So overall, I pretty much reiterate my bear case. I can be wrong. I'm always wrong. Short my ratings. That's always a win for you. Not advice. I'm just freaking joking. So yeah, that's my take on Pfizer. Let's see what Q3 is going to bring. But overall, unless I see a blockbuster drug, maybe Nurtec. This is the one with the migraine. But if you look at the results, Nurtec, it was here 360 million in the last quarter, which is, how much? 9 times less than Eliquis. You see where the problem is, right? So anyways, let me know your thoughts in the comments. Let me know why I can be wrong. And yeah, see you in the next one.